Now let us discuss one more question. Answer any one out of the following two questions. First is, measures Kashdash Private Limited, an Indian company in the business of event management throughout India, withdraws 10 lakhs in cash on 7th day of each month during the financial year 1920 from its current account with the Union Bank. So they are withdrawing every month 10 lakh rupees from their current account for local payments and for payment of wages and incentives to temporary employees engaged in different events. It did not made a single payment of 10,000 or more to a person in a day. So the provisions of 48.3 does not attract. Now they are asking, examine the liability of tax deduction at source in present case. So we have seen the provisions of section 194N. So in case of if you withdraw from any bank, from any of your bank account, whether it's saving account or current account, say in aggregate, if any amount has been withdrawn in aggregate exceeding rupees 1 crore in cash during the financial year. So in your financial year, rate of tax deduction was 2% of the sum so withdrawn, in excess of 1 crore. Now it is straight away, whatever amount has been withdrawn, tax will be what? Deducted at source in case if withdrawal exceeds 1 crore. And in case the person has not furnished the return in this current financial year, if they have not furnished the return for preceding 3 financial years, the rate of tax deduction will be 2% from 20, if it is withdrawn in excess of 20 lakhs up to say 1 crore, and subsequently the rate has been enhanced to 5% excess of 1 crore. But in this particularly for your assessment year, the answer will be here, since he has withdrawn 1 crore and 20 lakh rupees. So at the time of withdrawal, 10 lakh rupees has been withdrawn every month. So 12, that is 1 crore, 20 lakh rupees has been withdrawn. So here the concerned Union Bank will deduct tax at source. Will deduct what? Tax at source at rate of 2% here. On withdrawals in excess of 1 crore. So he'll be withdrawing in the month of February on 10 lakh, 2% will be tax deducted at source by the bank, and then on 10 lakh rupees further in the month of March, tax deducted at source will be what? 10 lakh, 2% of rupees 10 lakh. So here this question was to be answered because by virtue of the amendment which has been carried out under section 194N. Then measures TQINC, a foreign company, seconded some of the employees to the collaborator measures Techwell Limited, an Indian company working on a turnkey project for setting up a pharma industry here. So they have sent certain employees to work for the Indian company. These employees worked with measures Techwell Limited throughout the financial year 18-19, and these employees were in receipt of salary from Techwell Limited. They were in receipt of salary from Techwell Limited. So basically, here since services are rendered in India, as per 912, income is what? Deemed to accrue or rise in India. Salary income is deemed to accrue or rise in India. And they were in receipt of salary from Techwell Limited. They were also in receipt of special allowance directly from TQINC in foreign currency outside India. So they are what? In receipt of this special allowance directly outside India, but basically the income, these allowances also deemed to accrue or rise in India. Measures Techwell Limited deducted tax under 192 on the component of salary paid by it without taking into account the special allowance paid abroad by Measures TQINC in foreign currency to these employees. Okay. Now for this reason, the revenue authorities treated Measures Techwell Limited as assessee in default under section 201 for non-deduction of tax at source on special allowances component of salary paid by measures TQINC under section 192. Now they have treated this particularly TechWell Limited, but you are assessing in a default because you have not deducted tax at source on the special allowances. Is such treatment of revenue authorities and consequent levy of interest and penalty justified? This is their question. It has already been asked in earlier in examination, which this is there in our compiler also. Now here basically the employer, it is the person who is responsible for making the payment. Person responsible for making payment of salaries is basically TechWell here, TechWell Limited. This TechWell Limited has to consider the entire salary for purpose of TDS. For purpose of TDS. So not only the salary which they are paying, but also the allowances also. Allowances are required to be considered. So hence, this TechWell Limited will be regarded as what? Assessee in default. Because computation of salary will be as per the provisions of section 15, and all the salary will be, all allowances, even if they have been paid outside India, will be considered because the salary income deemed to accrue or rise in India as per the provisions of 912. Now, these allowances are required to be considered here. Therefore, TechWell Limited will be regarded as assessee in default, but say, and will be liable for interest under section 201. But in case the employees they are the residents here, they have furnished the return of income, and taken the salary including allowances into consideration, paid tax accordingly, then the company will be liable to pay interest up to the date of furnishing their return. Up to the date of furnishing the return, when they obtain a certificate from this effect from the chartered accountant of the concerned pays. Then so it will be regarded as assessee in default, will be liable to pay interest under section 201. Regarding say penalty, here if the assessee proves that there is a reasonable cause of such failure, there is what reasonable cause of such failure, then penalty for non-deduction of tax at source won't be attracted. Otherwise, they will be liable for penalty also. So fundamentally, this was already been asked in examination. It has been there in your compiler as well as the study material also. So this question is of TDS under 192. The court has decided the same in Ili Lilly Company Private Limited. Now the next question is the net result of business carried on by a branch, the net result of a business which has been carried on by a branch of a foreign company in India for financial year 31/3/20 was a profit of 20 lakhs after charge of the following. Now they are saying this is the information provided, and the question is in relation to how much compute the income to be declared by a branch in the return for the assessment year 2021. Now this is in relation to deduction in respect of HO expenditure. Provisions of section 44C gets attracted here. So what is the net profit as per profit and loss account? First of all, we are computing the deduction. So as per say section 44C, here section 44C, that is dealing with what? Deduction in respect of head office expenditure. Deduction in respect of HO expenditure. How much deduction can be claimed? That is 5% of the adjusted, 5% of the adjusted total income or HO expenditure so allocated, which I say lower. So first of all, what you have seen is we have to compute the adjusted total income. Now what adjusted total income means here? It is net profit as per P&L account. What is the net profit as per P&L account? It is 20 lakh rupees. It is 20 lakh rupees. Then we have to add the unabsorbed depreciation. Unabsorbed depreciation, which has been charged here. How much unabsorbed depreciation has been charged? 15 lakh is the current year depreciation. So depreciation won't be added back, but unabsorbed depreciation will be added back. So how much unabsorbed depreciation? Current year depreciation 15 lakhs won't be added back. Unabsorbed depreciation of 17 lakhs will be added back. Then they add what? Unabsorbed capital expenditure on family planning. They say that capital expenditure incurred on promoting family planning amongst employees is 7 lakhs. 7 lakh is 1/5 of the total expenditure incurred on promoting the family planning. So this much has been claimed. This will be added back, 7 lakh rupees, which has been debited here in the profit and loss. Then we have to add what? Brought forward business loss. Brought forward business loss without adjustment of that brought forward losses. And how much it is? 25 lakhs. That is 25 lakhs. And we have also to add deductions under Chapter 6A. This income has been arrived after charging the following. Deduction under Chapter 6A. Deduction under Chapter 6A. That is 20 lakhs. That will also be added back. And we have to add what? Deduction in respect of HO expenses. 44C deduction, HO expenses, that has been 125 lakhs. So this is basically the adjusted total income. This is the adjusted total income. This is the adjusted total income here. So when we compute it, works out to be how much? 20 lakhs plus 17 lakhs plus 7 lakhs plus 25 lakhs plus 20 lakhs plus 125 lakhs. So it comes out to be 2 crores 14 lakhs. So admissible deduction will be admissible deduction under section 44C will be what? Number 1, lower of 5% of adjusted total income. Adjusted total income, that is 5% of adjusted total income. Adjusted total income works out to be 2 crore 14 lakhs into 5% is 10 lakh 70,000, or number 2, HO expenditure, which has been allocated 1 crore 25 lakhs, whichever is less. So this will be allowed. So our net profit, your net income is how much? Net income as stated is, net income stated is 20 lakh rupees. 20 lakh rupees is the net income. Add HO expense. Add HO expense. How much HO expense is there? 125 lakhs allocated to branch. So this works out to be 1 crore 45 lakhs less allowable deduction under section 44C. This is 10 crore 70 lakh, 10 lakh 70,000, sorry. So it is 10 lakh 70,000. That is allowable deduction. So 145 minus 1070. So this will be the income 134. This is the total income to be reported by NR in this particular case. So this was dealing with section 44C. It was a question specifically meant for the provisions of what section 44C. Then next question is explain in brief whether the transaction interest of 5 lakh paid on monies borrowed by Smith, a NR, for the purpose of doing garment at Mumbai, business of Mumbai, to Mr. John, who is also a NR, attracts income tax in India in hands of the recipient. So this was about section 915, interest in respect of monies borrowed, okay, payable by NR, will be deemed to accrue or arise in hands of recipient, will be deemed to accrue or arise in hands of recipient if such debt has been incurred for the purpose of what? By this NR, the debt has been incurred for purpose of PGBP in India, for carrying on business in India. Now, in this particular circumstance, here, this 5 lakh is paid on monies borrowed by Mr. Smith for purpose of doing garment business in Mumbai. So, in hands of Mr. John, income will be what? Income will be deemed to accrue or rise in India. Income will be deemed to accrue or rise in India. And same will be what? Taxable in India. And same will be taxable in India. So, question relating to section 915, when we discuss section 9, that is income deemed to accrue or rise in India.